Adam Aaron, AMC, and the share sale getting some attention. He did tweet back in August. I said that at age 67, I would sell some shares toward year end. All trading decisions out of my hands. Goes on to say those sales are all now finished. I still own or plan to vest in more than 2 million shares. I am in. The headline, though, out of Bloomberg this morning, Adam Aaron says he's done selling shares $42 million later.
Yeah, he sold 625,000 in November, another 312,000 in December, and then this most recent sale again of 312,000 shares. Most of the shares that he says he's going to hold, I don't believe have vested as of yet. He also did transfer, I think it was 500,000 shares he gifted to his adult children. I mean, we've talked for quite some time about how could you not, if you were in his position, try to monetize to a certain extent the enormous gains that were fully unexpected from a company that is still dealing with the impact of the pandemic, despite the incredible success of the last Spider-Man movie. And Mike, I mean, any valuation you wanted to use on a fundamental basis would not get you anywhere near an $11.6 billion market value for this company.
No, but it was, what, 20, 25,
yes, 25
at some point. You know, and then you add the debt, and it seemed out of whack. And what's been interesting is it's not even clear that his share sales have been a big pressure point, because it's just been, you know, it's been in a bit of a downtrend. You know, GameStop, something similar, where a little bit of the energy went out of that trade. And then, you know, you even saw some responses from people who trade the stock that somehow it could be twisted as bullish because he wants to, you know, buy into the squeeze that's coming. That's the kind of big kind of fan fiction bull case for the stock. But yeah, it makes all the sense in the world for him to be, you know, turning it into some cash.
The day's been colored a bit by some upgrades of names that have been really hard hit. I know Piper upgrades Chegg today, and we're going to talk to Dan Rosenzweig later on this morning, I believe. But bunch of upgrades of Match and Bumble as well. Goldman takes a look at both names. They say over the next couple of years, we expect online penetration of online dating to increase, driven by the erosion of social stigma, increased access to the internet and mobile devices, and growth in the number of singles.
Yeah. Well, there was like a bit of a, you know, there's a demographic story there, a bit of a delay in terms of marriage. But also, I mean, they've really been cast as a reopening play as well. You know, you're going to meet somebody in person, in theory. And so it sort of worked. Again, it's like the airlines. They've had waves where the stocks got momentum because of that. And, you know, they're 30% off the high for Match. You know, as they keep trying to kind of create the next mousetrap, you know, in terms of product extension. So it does make sense. And it is the time for reiterating why you love the obvious great glamour stocks like the Teslas and Apples, and to say, hey, here's your chance for the thing that was, you know, going to the moon last year in terms of tech.
Yeah, I mean, Bumble, to your point, its best day was its first day when it went public early last year. And it's been nothing but down since.
Yes.
Blackstone-backed IPO, Blackstone-backed company, obviously, and reflective to a certain extent of what you were talking about, which is we were, you know, a year ago this time we were talking about the speculative nature of many of these companies, the ones that were coming public in particular, to a certain extent, seeing enormous first-day pops, and that ended.
And these companies that basically were trading on total addressable market numbers and things like, you know, it's a subscale competitor to something you already know, and it seemed like the new you know, the new competitor that you could probably try and see if it could capture market share quickly. A lot of those in retail and in consumer products, just, you know, look at the Oatly chart. You know, I mean, that kind of thing. That was 2021, you know, type of business, and that we're not really doing that anymore.
No, not.
Shepard Smith here. Thanks for watching CNBC on YouTube.